All right, guys, what is up? Today is currently Wednesday, the May 22nd, and I'm making this video to show you guys how to even start trading like with the trend and know whether you should be buying or selling. So you always want to look at the news and make sure there's high impact news, because when you're trading smart money concepts or when you're just trading in general, the people that control the market are smart money, which are the banks and institutions and the hedge funds. And so they move the market through news and other things, other supply and demand factors. And so when there's medium to high volatility in the market in real life, when there's medium to high impact news, the market creates new highs and lows because of how aggressive price is. So you see how there are 4 red lines here in total, and how the most latest red lines are lower than the previous ones. That's because there was news that was powerful enough news to actually move the market significantly downwards and break the previous lows that people actually assumed were dips that they can buy off of. And so that happened because of news. And so that's why we always want to only trade pairs that have news. And also not trade too many pairs so you can get analysis paralysis and shit like that. So the first thing you're going to want to do, guys, is you're going to zoom out on your trading pair. And like this is the 5-minute. And you're going to want to... and the reason you want to zoom out is so you can see the significant trend. Because if we zoom in, we'll see all that price action that doesn't matter. Especially because we're on a smaller time frame. So we want to zoom all the way out. And so we're on the 5-minute on Euro USD, which is fine, because Euro USD moves slower. And so here, where I'm pointing that gray arrow, that's the most recent low. This next gray arrow is the most recent, this next arrow is the most recent high. And then the ones before that are the previous highs and lows. And it looks like stairs. They're getting smaller. It's going downwards. So our trend is bearish. So we're selling for money. If we want to make money in this trend, we want to sell. And so, as you noticed, where specifically in the market did the market sell off from and made the most movement? It was here, right? Here, here, and here. The market sold off the most from these points. And that's why we want to sell high and never sell low, because that's the most money is made when you sell high. And so if we're wanting to sell this trend, since we have a new low here because price actually sold off today because we had high impact news, and it actually sold off and created a new low, which was right here from this previous low. And so because it did that, I actually have to draw new structure now. So that new red line right there, and then this new red line here at the bottom, because we have a new low. And so to make it a little bit more clean, I'll just make it smaller. Like that. I'm sorry, it's not like fucking neat. There we go. And so if I want to make money right here, I want to actually look within these 2 red pieces of structure, these 2 red lines here, which are here and here. So price currently is here at the bottom of this bottom red line. And so since we're selling and price usually goes up before going down, we want price to come up here to balance out the market towards the higher part of the range, to where prices are more expensive, to where the prices are more premium, and then sell off. And if you want to make this neater, you can take a tool on the trading view called the Gambox tool right here in the middle of the screen, the Gambox tool. And if you draw that and draw it from the high to the low of those red lines, the middle green line represents the balance of the current price range of those 2 red lines. That's where the balance is, the equilibrium, and that's basically where price is even. And so if we're selling, we want to sell at even or higher than even. So price right now is below even. Price right now is below that green line, and this means that prices are at a discount. They're at cheaper. They're cheap. So people are buying here because they're thinking this is a dip. People are buying here. So this is where this Euro USD is cheap. But since we're selling Euro USD, we want Euro USD to actually come up here and get more expensive above this green line or at this green line. And so if I'm looking to trade this, For me, I only trade what are called gaps or order blocks. So, hold on, guys. So if I'm looking to sell, I would want to sell here above. So, your entry point. So now that I know we're selling, your entry point wants to be above here at this gap right here. Or you want to trade at this entry point here. And the reason I'm drawing these gray lines here is because these specific areas are where they're called what are called gaps. So when there's high volatility in the market moves aggressively, like you see here with all these black candles, which are red candles really. And by aggressively, I mean going straight down or up. And so it went straight down here in the past, which was not too long ago, since we're on the 5 minute. And because it went aggressively, it didn't have time to come back up and go. You know how the market goes down, up, or up, down. We sell off at the down. You know how it goes down, up to sell down. We sell off at the up before it goes down. And so right here, the market still hasn't made that up movement before going down. And so these gray boxes are at the ups. And so these are called imbalance gaps. So these are gaps that are left behind the market because these wicks there haven't been any wicks to come and tap into these areas. And specifically here, so you see how where the black arrow is pointed to, that you see that how it's pointed to that little line, that black line of the candle, the wick of the candle, and you see how I'm moving it upwards, and now that's the new wick. The space in between those two wicks that I'm just pointed to, this was the first wick and this was the second wick right there. So the space in between those two wicks represents a gap space. So really it's drawn like this. So the gray box represents the gap, but the gray box is drawn in between those two wicks that I just pointed out. And so this space is a gap that hasn't gotten filled by any wick. And so smart money tends to, the people that control the market, they tend to tap and go. And so what we're really doing is we're trading with the banks, institutions, hedge funds. We're trading with the people that control the market. And so they're going to tap into these areas with a wick, because we have when you're trading smart money concepts or ICT or whatever, and you're trading the supply and demand, most of the time the market will, you'll have minimal drawdown on your entries. You'll have minimal drawdown on your entries when you're trading, meaning that the price won't hang out in the stop loss for long. It'll just tap and go and will instantly be in profit because we're trading at precise price levels. And so here, if you're new and you don't know which box to trade, what you would do is you would wait for price to come to those levels and you would wait to see a reaction. And by a reaction, I mean you would wait to see the black candles aggressively go downwards from those points. Okay, so what I mean by that is you would wait for price to come up to those gray boxes and immediately react and go straight down like we saw here in the past, right here. So, and then once we see that, we enter on those gray boxes, and yeah. And our stop loss would be the candle of the actual gray box, the gap that we're trading, or order block we're trading. And then our take profit would always be liquidity, which in this case, if you're trading with smart money, your liquidity, your take profits are always going to be support and resistance, because retail traders trade there. So you're always going to trade your take profits are always going to be support, resistance, or trend lines, things like that. And because those areas are areas of liquidity where there is money located at. So yeah, guys, I hope this video was helpful. If you're still confused, I have an ebook showing you visual examples of the setups that I take. I only trade 2 setups, and this is the first one that you're looking at right here with those gray boxes. Those gray boxes are literally represents my first setup, and then the second setup is literally just the same thing but with lines, because I trade order blocks. So I trade order blocks and gaps. So yeah, guys, if you want to connect with me, let me know. Peace out.